All right, all right, all right, all right. Good morning. How's everybody doing this fine day? I am ready to go through my portfolio with you guys. What we're going to be doing today is we're actually going to be going through your portfolio. This is the class portfolio, and we've been practicing a little bit, doing some options, and I think it's time to take some profits. And we're going to go through and we're going to talk about why I think it's time to take some profits. So the first thing we need to do is we need to jump right in and we need to start looking at the markets. And I want to answer one of the questions that I got from a student. Is like, what markets do you trade, Lan? What markets do you trade? Well, I stay pretty focused around a certain core market. I don't really venture out beyond it much. Um, I know it's boring to do that, but making money sometimes is just boring, right? I mean, we're not here. This isn't a video game. We're not doing this for fun and pleasure. We're doing it for money. And the best way to make money is just to kind of stay focused on a few things and not to try and go and do everything. It's really hard to do everything. So just doing a few things is generally the better way. When I've watched successful traders, they specialize in doing just usually one thing. And so I've been doing this for 35, 40 years. And I used to do everything. I like doing everything. It's fun doing everything. I'm a teacher too. I teach at the university, been teaching at the university for 20, 23, 20, 22, 22 years, almost 23 years. So 22 years I've been teaching at the university. And I think it's fun. And at the university, it's fun to teach lots of different things because lots of people want to do lots of different things. It doesn't mean they should all be doing just what I do. So I teach lots of things at the university. It doesn't mean I trade them all, but it's fun. And trading can be fun. But when you just, you get to the point where you're just like, you know what, I just need brass tacks. That's it. Just brass tacks. What are you going to do to just make money? I don't care about being fun anymore. For fun, I'll go fly my airplane, I'll go ride my motorcycle, I'll go ride my side by side, I'll go fishing, I'll go do whatever it is you like to do when you want to have fun. All right? And then trading doesn't that's not fun. It is fun. The problem I have is that I love doing it so much. I would rather do this than go fly my airplane. So I need to go fly my airplane a little bit more and not try to have this be my fun. But for most of us, it's just make money. All right. Let's just use this to make money. And the way we make money, the best way to make money at this is just to be, you know, good at one thing. Don't try and be a jack of all trades and a master of none. We want to be a master of just a few things. And so when I trade, I've focused in on just a few stocks, and that's all I really trade when I trade the stock market. And in the futures market, it's the same thing. I've really just kind of focused in on a few markets, and then that's all I trade because that's where I found that I find the greatest success. And when I venture out, start doing a lot of other things, then that's where I start to lose focus and that's where I start to give money back and I start to lose money and then I have to go back to the core to make the money so I can go play again. And that's not the best way to do it. So really, if the core is where you're making the money to fund all of your other playtime, why have the playtime? Not that you can't go on an adventure and try new things. You should be able to do that, right? And that's okay. But just remember where that core is. And the core for me is just a few stocks. And I don't trade a whole lot of stocks. I mean, there's 15,000 stocks in the stock market. There's penny stocks, there's $5 stocks, there's the big tech stocks, the Mag 7, there are all kinds of things. The 100% club, you see the 100% club I like. There's all kinds of things you can go off on adventures on. But if you just kind of have a core focus, you're going to have a little bit more concentration into a certain area that you're an expert at and that you've done your research into, and you're going to have a little bit better luck. So the reason I bring that up is because I want to bring over here our UBI portfolio, and I want you to focus in a little bit. Now, some of you have adopted this UBI portfolio idea. Now, I mentioned that with the Pitt News Magazine, people join people subscribe to Pitt News Magazine because they think it's for the magazine. Pitt News Magazine is more like a club. All right. You subscribe to Pitt News Magazine that lets me know that you want to be a member of the club. And I do a lot of things for the club members, for people who are members of Pit News Magazine. I could just say, hey, the club fee is $35, and oh, you, by the way, you get a magazine in that club fee. It's just a different way of marketing. All right. How do we want to do it? But people are willing to pay a subscription for a magazine, and so we use that as the leader. But really what you're doing is you're joining a club. All right. Being a member of Pit News Magazine or Pit News, or a member of Trade Mentors, or a member, whatever you want to call it, right? I'm not very good at marketing, and I don't really care. I make money. I make money in the stock market. I make money in my businesses. I make money. This is just for me, educating people, helping people along. It's just fun. I just enjoy it. It gives me meaning in life, right? And I need to have meaning in life. Making money doesn't give you a lot of meaning in life, especially when you're a capitalist bastard and you make money on the backs of other people. Right? Buy low, sell high. That's not producing anything. We don't make anything. We don't go out and we just, I think that somebody else's business is going to do well, so I'm going to buy into it so that when it does go up, I can sell it and make money off of them. That's why they call us capitalist bastards, right? Because we're not really producing anything. And so there's not a lot of, I mean, I get fulfillment and pleasure out of making money in the stock market, but I'm not producing anything. So my little Pit News Magazine gives me meaning. Going and teaching people at the university, that gives me meaning, right? Meaning in life. And I like to be helpful to other people, show them how to be capitalist bastards. Okay. So that's what it really comes down to. And I want you to be a member of my club. So come and join my club and be a part of it. And the way you do that is you subscribe to my magazine. And we work really hard on the magazine, and it's fun and it's pleasure, and we like doing it. It's creative. We get to write down all the stuff that we think about and educate and teach and learn and be a part of a club. But I also work hours and hours and hours on these spreadsheets and on software to help, make it easier to track our income. Because the software that we trade with doesn't really do that very well, right? I mean, it's an accounting package of current trades, or what's active right now, and that's it. And then you get a statement. And if that's the only accounting you're doing on your tracking your trades and trying to build a portfolio life and be a good, responsible capitalist bastard, you're not gonna. You have no idea what you're doing. You're trading blind, because the accounting systems that come from our brokerage firms is at best worthless, right? I mean, at best it's worthless. So I spend hundreds of hours, literally hundreds of hours, working on these spreadsheets, and I always have. I've always worked on spreadsheets. I'm not the best spreadsheet guy in the world, but I'm not bad either. I do okay. And so I give these spreadsheets away to you for free, because you're part of a member of the Pit News Magazine Club, right? So that's how you get these spreadsheets that I work on. And you can see there's a whole bunch of them down here. Everything from, how to track your day trades, and we go from month to month to month. Those are in here. And then, of course, we got the Gravy Train portfolio, which is brand new. This is the new version. The old version is still in here. So this is the old version, and you can see it's in here. And I posted this out to, and the reason I'm belaboring this is because I posted there's all these little calculators in here. See this? There's like 10 spreadsheets. It's not just one. It's just that I put them all into one file. Makes it easy for you. In Excel, they let you put lots of spreadsheets into one file. So I've created all these spreadsheets for you, and you get all of them, and you can have them all. And I would recommend you use them, because they help you become better traders. All right. So the one that's the most recent is the one I call, and this is the Cash Cow portfolio. It's an old one. Here's our covered call one, which we talked about. We've been doing covered calls lately. And then this is what I call the Gravy Train portfolio. Now, this is the new one. And it is a redesign of the old Cash Cow portfolio. All right. And this is because we started doing these Yield Max funds. And Yield Max funds are relatively new. Well, they're only a couple years old. Now, we understand the concepts, right? We know what they're trying to accomplish. We know what they're doing. And I really like what they're doing. So it works into my portfolio quite nicely. But is it for everyone? No, not necessarily. I don't think everyone should be in Yield Max funds if you don't understand them. But if you come and hang out with me, you'll understand them, because I like them, and so I teach them. I teach a lot about them. All right. Is it 100% of our portfolio? No, of course, we've always said it's not 100% of our portfolio. There's a use case for them. So this is the old portfolio, and sorry, it's scrolling off the screen because the screen's small, but I've redesigned this, and this is the new one. I like it better. I think it's better. It takes more things into consideration, and the problem with it is that it's very. Oh, and I changed it again since I posted it for you guys on Pit News Magazine. So you got your email. It said, Pit News Magazine is here. Here's the new spreadsheet. Everybody's like, okay, Len sent out this new spreadsheet finally that he's been talking about for 3 months. And you went and downloaded it. And then I changed it already like 3 times since then. So there's a new version, and then I posted another new version, and then I posted another new version. So there's another new version out there. So if you got it and started transferring all your stuff in there, I apologize. There's a new version. You can either go and pull up the new version and change the formulas, which is harder to do because then you're going to have to identify which one's changed. Or you can just copy and paste all of your data back into the new formula, into the new window. All you really have to do is just copy and paste these little cells right here. Just copy all of your cells out of here and put them in. And it's going to be a lot of work. And I apologize. But I updated the data. If you want to, well, I don't know. I wouldn't trust it. You got to just move your data because I changed a lot of things. I redid this whole top level. And then that adjusted all of the stuff on each section up here and down here, and you're just going to have to change it if you went and already did it, and I apologize. But I gave you a new one, and I'm going to keep changing this stuff up because I'm making new stuff. And you get into different, and one of the things I want to talk about with this portfolio is that I have another version as well, because this version is very simple and it's very easy if you're starting your and this really mostly just tracks your yield max funds or your high dividend funds. Now, of course, I do have a section in here so you can track some of your trades, right? Some stock trades are down in here too in case you do some stock trading. So, but the problem with this portfolio is that it's figuring that you're starting with a brand new portfolio. It's like, oh, I got this new spreadsheet. Lan's talking about this. I'm going to start up a new trading account, and this is my initial deposit into the new trading account. I'm going to put the money here, and then from there on, we're going to grow. All right. This is a very simple version. The problem that I'm having is that's not the way my account is. My account is like 10 years old, right? This one that I'm working off of. And because of that, I got lots of trades prior to when we started doing the yield max funds. And so my portfolio, which is this one here, which is my real money portfolio, is way different than a little bit different than this one. And so you may be in that same situation. You may know, well, Lan, I'm trying to do this in a portfolio that I've had for 10 years. If that's the case, this portfolio here is going to take some modifications for you. And I'm still working on mine. I just can't make it right. I can't get it right. I'm still working on trying to figure out how to meld all that stuff together. And it's just causing me some nightmares. And I've been working with ChatGPT, working with the AI system, been working with Microsoft's AI system that's in here. And my brain's just not able to attach all the pieces, and I'm still working on it. So you have to, at some point, specify a date that you're going to go from. It's like, okay, I started doing yield max funds July of last year. So that's got to be kind of my starting cutoff date. And so everything after that has to be this. But then you got all this money that you had in there before, and you got all this profit that's showing up or losses on different things. And it's all screwed up. So that makes it really hard. If you're starting fresh, it's easy. And so this portfolio that I gave to you is if you're starting fresh. So you just have to kind of understand the math that's in there. And I know it's a little bit complicated. I know it's complicated because even when I talk to ChatGPT, it's like, wow, you're doing a complicated thing here. This is really advanced mathematics for tracking a portfolio, professional portfolio tracking system. And we've gotten kind of deep. And I didn't mean to get deep, but it gets deep. Sometimes you get deep, and that's what it is. So I just wanted to let you know that those spreadsheets are out there. I appreciate you being a member of Pit News Magazine, and that's how you get these spreadsheets and other things too. There's lots of other stuff that we're going to do for you as a member of Pit News Magazine. One of those things is the podcast. I wanted to talk to you about Claire's podcast. It's Pit News Magazine's podcast, but Claire wanted to take it beyond we were having one podcast that we'd put in the magazine, right? If we got those of you who are subscribers, if you remember, we put one podcast in the magazine. And she decided that she wanted to do the podcast because it was one of our most popular sections. People really liked it. They were commenting on it and saying, we love the podcast in the magazine. And so she says, well, let's take it out and can I do that more often? Can we make 4 of them once a month instead of just once? I mean, instead of once a month, we'll do it 4 times a month. I said, I can't. I don't have time. I don't have time to do it. She goes, you don't have to. I'll do it all. So I said, okay, if you'll do it all, then I will go ahead. Let's do it. And so she took the reins and decided that she was going to do the podcast. All right. And that is what happened right here.
Hey, Claire here. Guess what? Mr. Turner handed me the mic. I've now got my very own podcast, Pitt News on Air, your new weekly hit from Pitt News Magazine. Join me every Wednesday for stories, interviews, and a little behind-the-scenes scoop. We're live on Spotify, and yep, now on Apple Podcasts, too. Visit pittnews.com to follow. Come hang out with me and the gang. We're all there. Jake and Lena, of course, Lan Turner, David Duty, Dr. Scott Brown, Jordan Black, and even Aiden shows up on occasion. We're having a world of fun. Don't miss out. Pitt News on Air. Because news should never be boring. It's where your trading friends are. Follow us wherever you get your podcasts.
All right. So Claire finally got me a little spot for her over there on Pitt News Magazine, on Pitt News Podcast, Pitt News on Air. That's what she's calling it, what we're calling it. And she only in that thing mentioned the two, Spotify and Apple. But it's also now, show you, it's also over on, and I had that up here. Where did it go? There it is. It's also on our YouTube page you go to get to this projection, right? This live's class. If you notice when you go to Trade Mentors, which is our website or our YouTube channel, look right here. There's a thing called podcasts. Now they show up down here too when you upload them in the main list, but right here, podcasts. So if you click that, you can see there's Claire's podcast right there. So if you click on it, it opens. Oh, that's playing the first one, I guess. How do we get it to just, if you click there, it gives you a list of them. Oh, there they all are. Wait a second. That's not what I wanted. I don't know how to run it. Claire does it. You hit podcasts. I thought that would pull up all the podcasts. That's not what we wanted either. Anyway, it's on YouTube now too. How come that's not working? YouTube/Trade Mentors. Come on, YouTube. Podcasts. All right, there it is. Play all. I don't want to play all. So that's it. You click it and it'll open up and it'll show you all the podcasts and then you can choose from them. But anyway, it's over on our YouTube channel as well. She didn't mention that in there. Maybe we'll have her change that because that's new. She just got that done last night. So it's on Trade Mentors. There you go. Podcasts everywhere. Podcasts for everyone. And they're free. You don't even have to pay for them. They're just part of podcasts. You don't charge for a podcast. So anyway, this is the June issue of Pitt News Magazine. Turned out really beautiful. And so it came through and hold on. So it turned out really nice and beautiful. This is a great article. The news isn't the cause. That's one that the podcast got done on, I think down here at the bottom. You come do the podcast. The podcast was part of, there's the podcast. Oh, Jordan Black's bond, 2-year bond. So Jordan Black wrote an article on the 2-year bond. We need to go look at that. And I want to bring that up because it's very important that we look at that as well. Remember, when bonds go up, stocks go down. When stocks go down, bonds go up. It's that simple. And he's got a beautiful article that highlights that. And so this is the June issue, and then this is the May issue. And the May issue was really fun because we talked about the BlackRock algorithm and all that kind of stuff. So you can see a little bit about the Pitt News Magazine and being a member and a club member of that. And then, of course, all the articles they're all recorded, so you don't have to read them. You can just listen to them like a podcast. So they're not podcasts, but they're just recordings of the article. So that's pretty cool. All right. And to get a hold of those, of course, you go over to Pitt News Magazine. pitnews.com, and you just subscribe here. And then this is where you follow Claire on her podcast. Click here, and that gets you all signed up, and away you go. All right. Very nice. Okay, so let's go in and start talking about our core, which is what I started talking about, the core pieces that we trade. And I'm going to bring up my yeah, and you know what? I'm going to bring up my real money portfolio. Actually, I'm going to bring up the one that we started off because it's exactly the same. The difference between the one I gave you, so you know it's in the list. See here, we have YMAG, Misty, NVIDIA, Tesla, and PLTY. Those are the yield max funds that I really like. Those are my favorites out of all of them that they do. I do those. Now, for me, if you bring over mine, this is my spreadsheet, you can see these are my real money ones. So I do YMAG, YMAX, Misty, Snowy, Tesla, YBit, PLTY, and NVIDIA. Those are the only yield max funds I have any money in right now. All right. So if you want to look at the ones I do, I kind of focused in on those. And so then because of that, because I have those yield max funds, those funds become the primary funds that I trade. So if I were to create a new portfolio and just say Lands Active UBI portfolio like that, now we can come in here and we would just pull up YMAG, YMAX, right? We'd pull up MSTY, SNOY, TSLY, YBIT, PLTY, and NVDY. Just like that. You can just type them all in, separated by commas, hit enter, and it'll open all those up. Now, these are the ones that I have real money in right now for my yield max income. And then you want to see which ones are the ones that they play off of, all right? Because these you don't trade. These are ones you invest in. These are like machines that you run, all right? I wrote an article about that in Pitt News Magazine. You don't trade these markets. You run these markets as if they're machines. Now, you can move money in and out of them as needed, as it warrants. But for the most part, we're just going to run these machines, all right? We put our money in there, and then they kick back money, and then we want to get them into cash cows where they kick back enough money that they pay for themselves. If they dip and you want to get in and add some more, then you can wait for the opportunity to get in, and you can add some more and get in. But you don't really pay that much attention to this market because it's just trading options. This is just an options fund that they use to trade on the underlying market. So the underlying market is in the name of it. So it's PLTY. That's not the stock. That's the ETF that trades the options on PLTR. So that means you need to open up PLTR, and that is one that you're going to trade. All right. You're going to trade this market. This is where we're going to put options on it. We're going to hedge it. Let's say we got $100,000 in PLTY. Well, if that's the case, we're going to let this one run, but we have to hedge it. We have to say, well, if we're looking at a market that's getting bad and we expect the market to fall or flush, we might want to buy some puts in here, sell some puts, buy some puts, sell some covered calls, do some things to collect money as this market flushes or falls, and we can buy into this market as well. This is a lot of people are concerned about NAV decay, right? So, NAV decay. I'm worried about my NAV decay. Every market has NAV decay. You know, this is something that I wrote an article about in Pitt News Magazine as well. So what happens is people are concerned about NAV decay. So let's talk about that just for a second while we're here. So we trade PLTR and PLTY as a pair. All right. You want to trade them as a pair because PLTY is going to give you these high dividends. All right. It's going to pay you high dividends. In fact, let's go look at our little portfolio over here. Okay. Where did it go? Let's look at our little portfolio over here. This is the one I sent you. And if you look in here, PLTY pays out $5.33 per share, or a 97% yield. All right. And where we have in here, if we look at PLTY on our little spreadsheet, PLTY is right here. It's the last one in the list. Let's scoot over there. Look, we did not have any initial infusion. The only thing we have in PLTY is money we made from another stock, and we put it in there. All right. So I've separated that out in the spreadsheet. It didn't used to be separated. We separated that out. So you can see your initial deposit, and then you can see any money that's come back in as a redeposit. So I break those two numbers apart. So this is your initial infusion, and then we made $4,000 as an additional. So that's money that came in from dividends, and we reinvested the dividends. All right. Right now in this little portfolio, cash on hand, we have $14,000 cash on hand. We can go do whatever we want with it. We haven't reinvested that yet, and we probably should. We should probably do something with it. But anytime you get your dividends, you always want to remember that you don't just reinvest it immediately. Never, ever, 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 ever drip your dividends. All right. That is the most worst thing you can ever do. Always treat it as new capital. You get a dividend, have it go into your cash account so that you can then decide where the most strategic place is to enter that. Just because it's coming in, you don't want to throw it back in. What happens if you sit there and the market's turning and we all do our accumulation distribution and we all do our trading, right? And we're looking at our Fibonacci numbers and our one standard deviation, and the market's up at the top, and we expect it to come back down to the one standard deviation, right? It's something we talk about almost every day in these classes. And so what if you expect that to happen, but you get a dividend right up there at the top and you just drip it, you put it right back in, and then the market falls like you anticipated, but you put your money in at the top. What happens? Instead of compounding your profits, you're compounding your losses. Think about that for a second. We don't want to compound losses. That's not a good idea. And anytime you buy high and a market flushes, whether it's in a yield max fund from your dividends or in a any fund, just PLTR itself, if you put money in it high and the market falls, you're compounding your losses. So we don't want to compound losses. We want to compound profits. And you're like, well, if I wait long enough, Lan, it'll come back. Markets can stay irrational longer than you can stay liquid. I hate that comment. I hate that worse than anything else. If you're the guy that says, well, I'm just going to wait for it to come back and I'll be okay. Well, go to another channel. There's a channel over there for people who talk like that. All right. Go to that channel. This channel is not that channel. All right. What we do over here is we buy and sell, because the way you make money is you buy low and you sell high. If you just hang on to it forever, when are you going to ever sell it? Well, I ain't never going to sell it. Okay, well, then why are you doing this? All right, we're running this like a business. We want to be business-minded people. If you're not a business-minded person, you're not going to do well in my class, because we're business-minded people. We have inventory, all right? We buy inventory, we put it on the shelf, we sell it, and then we buy more inventory, and we make it a business. That's what we're doing here, is we're running a business, all right? You have to sell it higher than you bought it for, or else your business doesn't do well. So that's what we're doing here. We're trying to be, I know we're capitalist bastards, but we have to run our business like a capitalist, all right? We can't just buy and hold. Buy and hold is okay. There's places for it when you're going to run something. Even in I don't even buy and hold in my long-term IRAs and Roths and all that stuff. I don't buy and hold. I don't. I never have. I'm not good at buy and hold, because I hate to watch my money sit there for 10. I watched you know why? I'll tell you why. Because I watched my father-in-law, former father-in-law. It's another story. So my father-in-law made a lot of money. He put his nose to the grindstone, and he worked for Thiokol. You know Thiokol? They're the guys that made the rocket boosters for the space shuttle, the one that exploded and blew up. He made that. So anyway, he worked for Thiokol, and just real hard worker. And he just did the corporate thing, and he just kept putting his money in, and he got all of his money in and just kept putting it into the stock market for him. And the market went up and up and up and up and up and up, and it went up and up and up and up. And then when he was ready to retire, I'll be damned if that market didn't go straight down. And he didn't have any of his money left, because he didn't trade it. He didn't systematically work it. He didn't know anything about investing. He didn't know anything about trading. He didn't know anything. He'd never done anything like that. He had always been buy and hold. So he made all this money in his retirement account. And then when he was ready to retire, the market was down for the next 2 years, 3 years, 4 years. Well, I'll just wait for it to come back. Okay. What are you going to do in the next 3 or 4 years? You're going to watch your entire life savings disappear as the market tumbles. Well, it did come back, Lan. Yes, it did. It did come back, and he was right. By sitting on his hands and waiting, it came back. But he had like 5 years of, being really sad, right? Where he had to wait for it to come back. And in that time frame where it turned and came back, finally got back to where he was, well, he had to live off of it. And so he kept taking money out on the way down, all the way down, all the way down. And so by the time it turned around, started to go back up, well, he had hardly any of the money left that he had to going back up the other direction. It's just, I'm not a fan of that kind of trading. I would much rather run my business run my trading like a business. And so that's what I do. And that's why there's what we call the float, right? I talk about the float in Pitt News Magazine, where that's what stock companies do, right? That's what the stock markets, and the whole concept behind the float is that you have a certain number of shares and they rotate those shares. How many times can you rotate your inventory in a month, right? If you own a store, then you have cans of beans on the shelf. How many times can you rotate that? That's called the float. How many times can you rotate your beans every month? You want to rotate your entire inventory as many times as you possibly can, right? The more times you can rotate your inventory, the more time you can rotate the float, the more money you can make. So you're buying inventory, you're selling it. You're buying it, you're selling it. You're buying it, you're selling it. You're buying more, putting it back on the shelf, you're selling it. You're buying more, putting it back on the shelf, and you're selling it. At the end of the term, you've rotated your stock out 20 times maybe in a month, right? Now, we don't usually have to rotate our stock out 20 times in a month in the stock market. We can usually rotate it out, maybe once a month or every couple months even. So that's buy and hold for me. I'll buy and hold it for maybe a month or two, and then I'll rotate it out. So today is a time that we're going to go through, and the reason I put that little out on the little marquee is that we want to rotate out our stock. All right, so we want to rotate it out. So we rotate systematically, not just try to rotate it for the purpose of rotating. We want to buy low, sell high, rotate it, buy low, sell high. And sometimes you sit on your hands and wait for the market to flush back down so you can buy some inventory at a lower price, because we're really worried about buying inventory at a higher price. And sometimes you don't have to be in the market all the time. That's one thing most people don't understand. It's like we use the market for our purposes. We're not playing a video game. That's what I was saying earlier. I want to tie that back together. This isn't a video game. We're not doing it for fun and pleasure. We're doing it to make money. And the way you make money is you have inventory and you have to rotate that inventory. And you only want to buy your inventory when inventory is low. You don't have to, you make your money and then you wait for the inventory to get low, then you buy more and then you wait for it to go back up. There's a time where you might not ever be in the market. Now you can play both sides and you can say, well, I can make money land when the market goes down. Okay, do that if you're wise enough and smart enough. But most of us just want to buy low and sell high. We just buy it, sell it, wait for the market to come back down, buy some more, wait for it to go back up. That's the accumulation distribution model that I talk about all the time, right? Accumulation distribution. So we're going to come in, and the stocks that I generally trade are traded around this UBI portfolio that I've been working with. All right. So Misty, for example, is one of the portfolios that I have way too much of. This is basically Bitcoin. And I not enough alcohol in here for Bitcoin conversation right now. I've made a lot of money on Bitcoin, but I've also lost a lot of money on Bitcoin. Bitcoin is a nasty market. All right. So you got to really be a speculator to play in the Bitcoin world. So MSTY is MSTR. All right. So the underlying is MSTR, and this is the underlying MSTR stock. So MSTY is the one that pays the dividends. We don't really trade this one. We just put our money in there, buy and hold, because we're just going to collect the dividends. The one that we trade is this one here, MSTR. So this is the one that we move in and out of, and we move our money, we buy it, we sell it, we buy it, we sell it. You want the stability? It's the MSTY. That gives us the stability of giving us that monthly income. Now we want to go out and we want to be traders. And this gives us the ability to get in, stay out for a little while, get back in when the market starts to look promising. And this is where you trade. Now, I want to go off on a little tangent here, just for a minute. I don't try not to stay on it too long, but the situation is that a lot of people are concerned about NAV decay. NAV decay. Lan, I hate these yield max funds because of the NAV decay. NAV decay is something that I can't handle. These markets just go down. I've talked about this before, and most of you have heard it. But the NAV decay just means that they're taking profits out. Anytime you take profits out, it's called NAV decay. All right. If we come over to MSTR, which is the normal underlying stock, there's no dividends on this stock, and you buy a whole bunch of it, and then you're my father-in-law and you need to live off of it, and you start taking money out, that's NAV decay. Do people not understand this? Is this something new that people who have been in the stock market as long as me, well, I don't know, I've been in a stock a long time. I see people on YouTube that you would think would be smart. They've got thousands and hundreds of thousands of followers. Lan, I don't follow you. You only have a couple thousand followers. What? I don't advertise my YouTube channel. It's a lab for my university class. I don't go out and I don't do things to get people to come and watch I don't pay money to YouTube to come and get people to watch my YouTube and build up my YouTube channel. This is my lab for my university class. I don't do anything to promote this except for go to the university and teach and tell people at the class to come. If somebody stumbles across little Lan Turner over here teaching people how to trade, well, they can come and join. Great. We'd love to have you. Happy to have you. But I'm not going to run an ad to tell you to come over here. If you don't want to come over here, I don't care. I don't care. This is a lab for my university class. That's what I care about. I care deeply about my university students. All right. I will do anything for them. So that's why we're here. This is for my university students. And if you're not one of my university students and you want to come and hang out with us, you are by all means welcome. And if you join Pitt News Magazine, I will love you as much as I love my university students. All right. So that's the name of the game over here. So I'm not running promotions and I'm not doing all the stuff that it takes to build a big YouTube channel. I don't really care about that kind of stuff. I care about just teaching my core little group of people, my little university students, how to trade. And I'm very opinionated because I've been doing it so long. And I see a lot of these guys that should be smarter than they are, who out there claiming to be teachers who are teaching people the wrong thing. And you can't really blame them. I mean, they're trying and everybody starts somewhere. Right? I mean, everybody's got to start somewhere. But I just feel bad. I tell people all the time, you're doing your math wrong. Nobody cares. They don't listen to me. You're doing your math wrong. You got a problem there. You're teaching everybody the wrong thing. NAV decay is something that happens when you take profits. All right. So you're going to go out there and you're going to listen to all these guys. Oh, we don't want to do the yield max because they have NAV decay. Well, NAV decay just means you're taking profits. It means you take money out of the market. If you go and buy, where's one that's a little bit more familiar with everybody? NVIDIA. You go buy NVIDIA and you start, like my father-in-law, taking money out. Well, that's NAV decay. You just took profits out. It's NAV decay. Whether yield max does the NAV decay for you or whether you do it yourself. If you take money out, that's NAV decay. All right. Doesn't matter. It's just, that's what happens to your account. The account goes down because you take the money out. It's just one versus the other. All right. Just one way or the other, you're taking money out. And so if you want to make money, you want to take profits, then you take money out. That's how you make, we're going to rotate the inventory, right? We're going to rotate the inventory. Now, if you just want to hang on to it and let it grow like my father-in-law did, I'm not going to say there's anything wrong with that. You can certainly do that. And a lot of people do that. They just put their money into a 401k or an IRA and they just feed it and let it go for 30 years. And what you'll notice mostly is that the biggest growth of your 401k or IRA is the money you put into it. All right. Most of the growth is the money you put into it. And the reason is because it grows and then it shrinks and then it grows and then it shrinks and then it grows and then it shrinks and then it grows and then it shrinks. And nobody takes advantage of the growth and then takes their money out. And when it shrinks, let it shrink and then go back up. And many people like my father-in-law, I would never expect to do that. Why? Because he's not smart enough. Not that he's not a smart guy. He's very smart. He's an engineer. All right. Worked at Thiokol. He built rocket ships. All right. Very smart guy, knows nothing about the stock market. So if you don't know anything about the stock market, that's what those things are for. Those types of investing are people who know nothing about the stock market and they're not going to maximize their profit potential. But if you're going to be in this class, it's because you want to be a capitalist bastard. And if you want to be a capitalist bastard, that means you should do capitalist bastard things. Which is buy and sell. All right. We're going to try and beat the market. Can you beat the market? Oh, I don't know. The market's currently up. The big old S&P is up 7.5%. My portfolio that I've been doing this with is up 18. So 714, more than doubling the S&P 500 right now. And that's even through this big nasty drop. So I'm not been doing too bad. I mean, it's not 1,000%, right? But that's just those little yield max funds are up over on my portfolio here, just on that one account. Just that one account. I got 1, 2, 3, 4, 5, 6, 7. I've got 7 accounts that I trade. And on that one account, which is my main account, it's the one that I focus most of my attention on. I'm doubling the S&P 500 returns. So more than doubling it. I don't feel bad about that. Now, could we have made more money doing something else? Yeah, probably. There's lots of ways to make money in these markets. And there's lots of things you can do to make more money. Is Tesla and Yield Max and all these funds that we like to trade in, are they the very best way to make money? Probably not. There's probably better ways to make money. But, we don't know that until hindsight. Hindsight's always 20/20, right? You can go look back and say, well, if I would have done this, I would have made more money. But the question is, would you have done that? Would you have done that? Probably not. So the name of the game is just to pick something. And again, I'm weaving like Donald Trump. I'm weaving back around to the beginning. Pick a very core thing that you feel comfortable with. Now, I feel comfortable with Yield Max because I'm an options trader. Traded options for years and years. I love options. All right. I've always been intrigued with options. I love trading them. I love learning about them. They're a very deep subject. You can lose yourself in options. You can study for years and years and years and still not know everything about options. I love them. Options are wonderful. And so when I saw that that's what Yield Max was doing, is they were running option strategies, it clicked with me and I fell in love with it immediately. All right. Because it just immediately clicked with me. I knew exactly what they were doing, what they were trying to accomplish. I had done it myself, tried to do it myself. Not exactly the same because they're a little bit more sophisticated than me, right? They were smart guys. I read their book, learned some stuff from them even. And I was really happy about what they were doing and thought that was a really cool system. And I wanted to participate and be a part of it. And so I teach you guys what I do. I don't tell you what to do. I just tell you what I do. I just tell you what I like to do. And what I like to do is I've been recently talking about the Yield Max funds. I've been excited about them. So I talk about them a lot. And, maybe I'll lose my excitement about them one day and say, well, they're not what I thought they were. And they're not performing as well as something else. And I could make more money going back to doing what I was doing before or, whatever. But I haven't stopped doing what I'm doing before. I just added Yield Max to it. And so now I use them in combination, one with the other. And so what do I trade? Well, the Yield Max funds have these stocks in them. And so my core trading has started to more drift towards those funds. And that's because I have money in the Yield Max funds, which I'm running like a business. And then I want to hedge them and I want to augment them. I want to reduce the NAV decay through trading the other fund. So I use them as a pair and I trade them together. All right. If I'm worried about NAV decay, I put more money into the one that doesn't have NAV decay. If I'm worried about if the market's starting to rally and it looks like it's going to make money, I'll take it out of the normal market and I put my money into the Yield Max fund. So I use them as a pair. Now I don't just have to take them out of. I don't just have to run the pair. If I make a lot of money in NVIDIA and it drops down into my account and they take the money out, right? NAV decay, because they paid me profits. I take that money, and if I want to reinvest it back into the market, I don't have to put it back into NVIDIA or back into NVDY. I can put it into anything I want because I always treat my dividends as new capital. All right. Anytime it comes out, new capital. Does it immediately go back in the market? Hell no, it doesn't immediately go back in the market because I might not be able to find anything I want to put back into the market. It sits there in my account for sometimes I've had money build up in there, 50, 60, 80, $100,000 sitting there in my cash account because I can't find anything I want to put it in. I never drip, never put it back in. But I use these things as tools, as combinations. All right. So we use them as a combination. So if I got a bunch of money in Misty, which I do, and it's falling, see this, it's coming back down. It's making our little drift back down, just like we talked about. Right. But this is the MSTY one. I'm going to go look at MSTR and I'm going to see how this is performing. So we're going to do our little Fibonacci ruler on here. We're going to look for the one standard deviation, and I'm going to start looking to trade this one. Now look how it pulled right back, just like a train on rails, back to the 38.2. It's making a little rally here. If it breaks the blue lights, that would be a B1, right? So we'd come in here, we do our math, we do a B1. This would be a B1. This one down here is our A1, right down in here. This is A1. It's actually, ooh, yeah. I'm going to call this A1 right here. It's X3S A1. You got that little break right there, but I'm going to run those two together and just call that one drive. I'm going to say this is drive 1, this is drive 2, and this was little teeny drive 3 off of this ABC bottom formation. So we get a little ABC pattern down in here. All right. So, and then that's your projection right back up. Look at that. Just like a train on rails. It went right straight back up that line, just like it's following my mathematical models. Probably because I've reversed engineered the market, and that's how I've come up with these tools. So these tools, the reason they work is because they are just repeating what the market does. That's what they do. That's why the tools were created, right? So now we have this is the A1. This is coming in. We broke. We're back down here. It hit the 38.2. It's getting ready to rally. I think we're going to go back up. Doesn't mean it can't break and come back down, which it certainly can, and it's got a red bar today. So we might come back down maybe into 50, maybe into 61.8. If it does, we'll start adding some more in. Now, I got so much Misty right now. I hate putting money in Misty. But I've made so much money on Misty that I guess I don't mind, because I've got a huge profit on Misty. So it's a big profit. I've got a lot of money into Misty, and it's way overbalanced, and that's my problem. I like to do a little balancing of my portfolio, and I've got way too much money in Misty. But it's because it makes me money. I make a lot of money on Misty. And it's actually coming out of MSTY. This is where it's coming. But see how it's drifting down right now, because the market's drifting down. It's not drifting down because of NAV decay. It's drifting down because this is coming down. All right. And that's okay, because we're going to get a huge dividend here relatively soon. And then this will drop again, but that's okay. They're going to give me a big chunk of money, $15,000, $18,000, $20,000. Boom, that's going to be my dividend. In fact, I tell you how much it's going to be. I don't know how it's not going to be that much. Let's see. How much of my dividends on Misty? Way too much. $12,811 is my estimate for this month. So make an $18,000, a $12,000 dividend coming out of Misty this month. And then I'll take a look at that and see where I want to put it. I might want to put it back into MSTR. The thing is if I'm looking at MSTR and I think MSTR is going to go up, then I have to decide whether I want to put my money in over here, or if I just want to put it back in over here and get another big dividend. It's just when you want to take profits. If you don't want to take profits anytime soon, don't put it into MSTY, put it into MSTR. And then you don't have to systematically, because MSTY is going to systematically take profits every month. Now, I've learned one thing along the way, and again, I'm going to weave back into my father-in-law's concept. I've always told people take profits along the way. So as you make money, take profits along the way. All right. That's a thing that I've always talked about. It's another reason why I've been really happy with the YieldMax funds, because you can put your money in there and they will take profits along the way as they make money. At the end of the year, you don't have a great big basket of money. You just have a whole bunch of little money along the way. The question is, did the market go all the way up like my father-in-law's account and then flush all the way back down to where he had nothing, right? Because he had a whole bunch of money and he thought he was rich beyond his wildest dreams. So he retired, and then he just left it all in there. And then the market all flushed right back down for the next 3-4 years. We had this big downturn, and then he had no money left because he didn't take profits along the way. And so at the end of the year, if he had taken profits along the way, like the YieldMax funds do, take money out as the market moves sideways, take the money out, take the money out, take the money out. Well, you'd have at least had all those little baskets of fun. You add them all up at the end. Would you have had more money than if they had not? Well, probably not if the market had stayed high. But the market didn't stay high. The market went back down. So then the little baskets of money all along the way made more money than the one big one that flushed back down. Does that make sense? I hope that makes sense to people. That's the problem that you have with not taking profits along the way. So if you can take profits along the way, like YieldMax does for us, well, you can turn and put it back in, which is what most of us are doing right now, right? I mean, I take money out of it and live off of it and do stuff with it and spend it and go buy things, but mostly I'm putting it back in. So it's just a reinvestment process. But if you reinvest it as new capital, it's a lot better than just doing this constant drip. Don't do the drip. All right, so we're looking at Misty, and Misty right now is getting ready to, it looks like to me, it's bouncing off that 38.2. But we got the blue light above. It's got to break the blue light to be B1. And if it turns and falls and comes back down here, now we can put some in the way we would do this. And I put a little in right in here. I put, I think I put, I can go look, but it doesn't matter the amount. Well, it does too. Let me go see how much I put in. Into Misty. Okay. I put, I got way too much Misty. Don't do what I do on Misty. I put in, okay, I put 15, 28, 29, 30. I put another $33,000 into Misty right in here. All right. Because I am anticipating that the market's going to rally. And if it doesn't, that's okay, because I've got more money sitting on the sideline. If it comes down to 61.8 down in this region and starts to turn and go back up, I'll probably put another $30,000 back into Misty down in here. It's okay, because I've made so much money on Misty that I got lots of money sitting ready to go back into Misty. So I'm anticipating that this thing's going to turn and go back up. But it's Bitcoin, and I'm not good at Bitcoin, and I've admitted that to you guys. I'm not good at I'm not good at currencies. I've never been good at I'm just not paid much attention to them, so I'm not good at them. But this is Mr. MSTR. And so that's what's going on here. And I trade it between these two. All right, between the two. I trade both of them. And then we're going to go to NVIDIA. NVDY, of course, is NVDA. So now we got to have both of those. And so we can look at NVDA. And as you know, we've all been watching this very closely. NVDA is coming up here, and it's getting ready to top out up in here. How we know it's topping out? We don't really, right? Nobody knows what the market's going to do, but look at that blue light. It's coming up in there. It's really coming up in there close. Now, I want to show you something, because there's two tools in here, and one tool is called the Bulls and Bears. And I love the Bulls and Bears. And the reason I love the Bulls and Bears is because it's got that yellow zone in there for the neutral. And the neutral zone is a Fibonacci sweet spot. That's a mathematically calculated Fibonacci sweet spot. But when we're doing this count and measure, you can also use the Bulls and Bears has the blue light system. And the blue light system, you'll notice, is I can turn it on and off. Watch, if I turn it off, it didn't go off. Why didn't it go off? Because what I've done is I've taken the parabolic SAR and I've calculated the parabolic SAR. I made this tool right here. If you go to most parabolic SARs and most software, they don't have all these features. So if you come in here, I made this parabolic SAR so that you can adjust it so it matches the Bulls and Bears. Remember, I told you all we did with the Bulls and Bears is we tuned in the parabolic SAR to the settings of what we figured in the back testing was the closest thing to the BlackRock algorithm as we possibly could figure. All right, so that's what the Bulls and Bears is. But you can make the parabolic SAR. Now, it'll get out of whack every now and again, but you can make the parabolic SAR read almost exactly like the Bulls and Bears. Now, why would I do that? It seems counterintuitive. If I got one tool, why would I just make the other tool to do the same thing? The reason is because I want to show you something. When people count their waves, if we turn off the Bulls and Bears, you'll get little red bars in here. See these little red bars? If you see these little red bars, they're going to help you know where these little pullbacks are. Now, we got one right here, and it's a lower high and it's a lower low, and it didn't go red. So that's okay. You can still see it. But oftentimes we'll see as we go through some of these markets, PLTY, PLTY. See the little red bars right there? Those little red bars are where you're going to count your waves. So if you come in here and you say, okay, this is our down in the valley so low. We're going to go down in here into the valley before the yellow dot, right? Or before the blue dots. So the valley below the blue dots is A1. So in other words, just where the blue lights, we just call the blue light break is the crossover. But there's really this valley down in here, right? So this, if you study my manual and you look at the spider web, then that we talk about the valley, right? The valley. Down in the valley, and then the mathematical model, and then the horizontal model is like this. Okay, so that's your speed fan. I call it the spider web, just for fun. But this is the speed fan. And so we're coming down here, and you have the natural trend line. It breaks down in the valley. You have the mathematical model, which is right here, which we're going to call A1. It's actually X2S A1, right? X2S A1, because it's the second exit off the top side to the upside. So X2S A1. And then see this little red one right here? Well, that's our first little, it's our first little break. Now, you have to kind of, these little tiny ones in here are not as important as the big major ones, but you still want to count them because they're places where you can add on to your long position. That's why we count them. So it becomes an A2. And it's easier to see if you turn on the bulls and bears. If I turn on bulls and bears, it makes it yellow. And you're like, well, why are you calling that a little pennant formation? Well, because it's the formation that it makes. Lower highs, right? And lower lows like that. Turns into a little pennant formation. Well, that little pennant formation is what ends up being one of our A2s or A3s or A4s or whatever. And if you have the bulls and bears turned on, sometimes it covers those up because it turns, if the market's bullish above the Fibonacci sweet spot, it just turns all the bars green. If you have the Fibonacci sweet spot right here, which is the delta cone of probability, one standard deviation, everything below it is red. See that? Yellow, red, green. It just changes the bar colors. But if you want to turn that off, now I've left the parabolic SAR on, so it mimics the blue light, and now you can see these little red bars. That can help you see these a little better. So now we come in here, and this is going to be A3. See, because we got the down in the valley, that's the A1. Then we got the first red bar, that's A2. And then we got the second set of red bars, A3, and we don't usually get an A4. Not that we can't, we certainly can, but we got an A4, and then it broke the blue lights. So the blue lights is your natural trend line. Now, again, you can use the speed fan for this side too. I generally don't, but it's the speed fan. It's the spider web. So you got one, you got your mathematical trend line, and you got one here, but then we go all the way back to the horizontal. So that's your speed fan, right? So there you go. Now, if it's coming down this way, we got a speed fan going this way. This is speed fan trading. All right, it's just trend lines. So you're going to come down there. You got your first green candle to make a new high. So we're going to draw our trend line between red and green candle, make a new high. Now the problem is, look, it's a little red bar in there. It's coming in here, but we got the natural trend line, which is right there. You can draw it in there if you want to. Speed fan's got more than 3 lines, so you can put that in there because it pulled back. But we got the natural trend lines, which are those two, and then you got this one here, which is the mathematical trend line, which is the blue light, and then you got your horizontal break, right, breaking above the previous high. So you can draw all those in there. That's your speed fan. That's your, let me make this a little bigger. Maybe you guys can see a little better if I do that. All right. So that's your speed fan. That's how that works. And then this is what we're calculating in anticipation of a continuation of the rise in price. Now, we got our Fibonacci ruler in here. We lay that in there just like that. And this is where this market comes back down into the Fibonacci sweet spot, which is just the delta cone of probability. Look at all the hairy bottoms. We talked about that yesterday in the afternoon class. We talked about hairy bottoms and hairy tops. Usually we call them bottoming tails and topping tails, but I think hairy bottoms and hairy tops are a lot more fun. So we're going to start calling them hairy hair. That's hair on that's hair of the dog, right? It's the hair. It's the hair on the dog. It's the hair on the little price bars, little candlestick wicks, whatever you want to call them. Let's call them hairs, all right? Because it's just funny. We can't take ourselves too seriously. All right, here we go. So we got A1, A2, A3, the little pullback into the Fibonacci sweet spot. We got a little bit of a red bar right there, but the market's starting to climb, and it looks like it wants to break those blue lights, and that would be a B1, right? And we love B1s. B1s are great. So we come in here with a B1. All right, just like that. And so there's our B1. So we're going to come in there and look for that and anticipate a B1. All right, so that's how I do the trading of the individual stocks and which ones I generally trade around. Now, there's obviously, if we come in here and we hit new and we come in here to the, we have to go in here to our let's just call it our active YouTube class portfolio. All right, so we're going to go okay. And now what I'm going to do is I'm going to come down here to track and trade, and I just click down here on one of these markets, and then I hit Control A, and it highlights all of them. And then I right click and I say Open Charts, and it's going to open up all the charts that are actively being traded in our portfolio. And the reason I want to do that is because we've got some of these that we want to take some profits on. All right, because they're reaching up into a high region. AMD is one of them, making a lot of money on AMD. Now, the question is, I bought these with 288 days till expiration. And so this one is already making its second run into the Fibonacci sweet spot. It already pulled back down, didn't even hit 38.2. And it's already starting to rally. Look at that. And it's going to break the blue light. So if we take our speed fan, just like we talked about, right? I'm going to send this to the back. Layers. Get rid of that one. Take your speed fan, draw it from the top down like that, out like this. There's one more. And then we got the natural speed line, or those are the two natural trend lines down there. And then we got the this one here is the mathematically calculated trend line, which is the blue light. And then we got the horizontal, which is going to be the breaking of the previous high. So that's your spider web. And this is going to be right down in here, right? This and right here. This is a B1. And did we get the perfect little setup coming down through here? This is B1 if it breaks those blue lights, which is down in the valley before the blue lights. So with the breaking of the blue lights, the little valley before the blue lights is the B1. Oh, man, you can't even spell B1. B1, just like that. And then down here, that's kind of a screwy one right there. I almost want to call this A1, B1, or A1, A2 here, but it's all the same one. I don't know. I would just call that A1 down there. So we got the A1, and then it broke right here, and we never did get a little red candle in there, right? Never did. But we got a lower high, not really lower high. Right there, we almost got something. But it just went straight up. It went straight up. Markets do that sometimes. So AMD just went straight up, and we're getting into a B1. So the question is, do we want to really sell out that option? We don't really want to sell it because it looks like it's going into a B1. We're up $7,000 on it. I got 288 days left on it. I bought it for the purpose of doing a poor man's covered call, but you don't want to sell premium against this thing if the market's so strong it's just going straight up. So we're not going to. Bristol Myers, we're going to ignore that one for now. Is it coming back? It looks like it's trying. And then we got Salesforce. Salesforce way down here. Look, we bought some Salesforce here. We can buy some more. As it comes back down into the Fibonacci sweet spot, right? Look at that beautiful thing. Oh, look at that. It came down there and touched 61.8, just like a computer had seen that number in its quant system. And it probably did, which is probably why that came down to that number right there, just like that. All right. Now we're starting to turn and we're starting to go back up. We're getting our natural trend line. Put in your speed fan, just like this. Put in your little spider web. Natural trend line, mathematical trend line, horizontal trend line. All right. So that's what we're looking for. These are opportunities to buy. Now, do we want to sell out right now? No. And this thing's coming down. We could sell some. We already did. Oh, look, we already got these. Oh, we're making money on that. That's beautiful. So we did the right thing there. Chart only. Chart. Come on. Oh, we got all that stuff going. This is just NVIDIA CRM. Oh, there it is. So we're making all kinds of money, man. We're just rocking and rolling. We're going to make this full profit on that because we put it in there at the right timing, right? So the market's coming down. We put in our options. We sold these up here, making all kinds of money. The question is, our long call that's got 288 days until expiration is down 687 because it went way up. And then rather than selling it and taking the profit, we sold options against it and made a whole bunch of money on the premium side. And then this dipped, and it dipped a little bit farther. And so we went back down. And the question is, do we want to take that off? No, because we think it's going to turn around and go back up now. It's going to break that B1 and go back up. So I ain't going to sell it. Cisco. Same thing here. The market's doing the nice little pullback here. We broke the blue lights there. See, that's an X1 right there. That's our first exit, but then the market just turned and went right straight back up. We don't want to take our option off right here. So what about this one? We don't have an option on this one. This is Natura. We're long. It's broke. We could add on as soon as we get another little red bar back. See, we're going to let that go up. So there's your first drive. Drive 1, pull back. Drive 2, pull back. We're in 20. We can put on some more later. NVIDIA, this is what we've been looking at, right? It's market's going to come up here. It's got to break those blue lights at some point. It's got to. It has to. It will. We just don't know where. It could keep going, and it's a strong market. Don't know. And then it'll flush back down into one of these regions here, and we can go along again. And at that point, we'll buy another. We can buy another option. We sold this option. We took our profits off of this one already. We did sell this up here. We got a little bit of money in there. We're $25. We'll hang on to it. What about that one? SMCI. We're running out of time. I got an appointment I got to be to. So we got to go fast. We're coming in here. Natural trend line. A little spider web in there. It's still going. This is a sell 3 puts, but it's against this. That's because we want to buy and go long. That's what that is. We don't want to sell this one either because it's getting ready to go. Super micro looks like it didn't break the blue lights. So this is A1. I'm going to call this A1. This is A2. I don't know. But we're up $8,000 and it's getting ready to run again. So I don't want to sell that one either. We're going to try and take some profits, but I don't think I want to do it on that one. I think we want to go ahead and let that thing run again. The SPY, we bought a call here the other day on a break of that blue light in anticipation of a continuation of the uptrend. We sold a whole bunch of options down here to collect premium, and we'd just take some shares if it went down, right? If we had enough money. I don't know if we got enough. We're already buying powers all the way down to 2. So we're loaded for bear, man. We spent every single penny we got into this market. Oh, look at this one. Targa is not doing well. Huh. That's funny. Let's just scoot our stop in a little bit. If we get stopped out on that, and we'll just get out of that market. It's not. This, I think, is one of our 100%ers. UAL, United Airline. We got some shares in there. Again, we got our little blue light going across the top just like that. So we got our first drive. This is A1. This is B1 right here. So we're going into United Airline. All right. So that's where we're at. Well, I thought we were going to sell some options today and take some profits. But now that we've gone through and seen all of our positions, I don't want to take any of them off. Bristol Myers, you ugly thing. That's our one caveat right there. That stupid thing. I don't know what I was thinking when I bought that dumb thing. We got to mitigate evil trades as well sometimes. But it looks like it's trying. It's trying to come back around for us. It's trying. It's trying. We sold a put down here to try and help us pay for some of the premium on that thing. I don't know where we're at on it. That's part of our. It's part of our portfolio, right? Just real quick, we'll pull this back up. We got that one down here, I think. We've been tracking that one down here. So we've got $590 in premium against our 2,700. We're so down 2,000. So we need to adjust that. And we've got some more premium coming in. So this is our Bristol Myers here that we're doing a little bit of mediation on. But you can see we've picked up $590 in selling premium to help us pay for that. So we're still down 2,000 or current value. It's down 1,000. I don't know what the current value on it is. I don't know. Anyway, I haven't got time to sit there and play with it. I'm going to let you guys do that. What the heck is going on there? Because I got to run. And so I've let you see the portfolio, talk a little bit. Hopefully what you've learned today is helpful. And I got to let you go, guys. John, thanks for the kind words about Pitt News Magazine. Appreciate it. And if you guys have any questions, please let me know. I do want to say one little thing.
Look, if you haven't subscribed to Pitt News Magazine yet, then I'm going to need to see you professionally because you must have something wrong with your brain.
All right, guys, that's enough playing around, goofing off. Here's one more thing.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys, that's it. We're going to let you go, and I got to get out of here. And we will catch you next Tuesday morning, and we'll follow up, and we'll start doing some more of this trading stuff. All right. See you then.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.